Have you ever wondered what change in the state of delivery meant? Or how do you use change in the state of delivery in your day to day trading? Well, in this video, I'll be showing you a quick um, trade breakdown that I took on Monday on NASDAQ using the change in the state of delivery concept, which was introduced by inner cycle trader Michael J. Augustine, ICT. Thus, changing the state of delivery is a style or strategy that I've adopted for a couple of months back now, and it appears on price from time to time. But you have to pay attention and you work in sync with your directional bias, your weekly directional bias, and daily directional bias. So for this particular trade breakdown, but first of all, what is changing the state of delivery? Changing the state of delivery is basically when there is a change in the flow, a sudden change with displacement in the flow or in the trend of price. So what I mean is, for an instance, take a look at this chart. We have a overall trend is bearish. That's from the weekly to the daily. We've been going bearish. As you can see, we've been bearish for a long time, right? Price keep making new lower highs, lower high, lower low, lower high, lower low, lower high, lower low, right? And then all of a sudden, right here rather, we make this lower high, and then we made a quick higher high. We took out this low, and then we also took out this high, and immediately after taking out this high, what did you see? What did we notice? We noticed price, this high right here, took out that high. As soon as price took out that high, right, quickly we noticed that we took out the high, and then there's a quick sharp sell, right? This candle took out the high, this bullish candle, and then immediately there's a bearish candle that engulfed this bullish candle, and then there's there is a break in structure, as you want to call it, or market structure shift, just like ICT always call it. So there is a change in structure or break of structure or market structure shift that validates our change in the state of delivery. So basically, what we first look out for is price taking out the previous liquidity, right? Previous high or previous low, price sweeping stops, buy stops, or sell stops. So as soon as we sweep that, and then the candle after that immediately rejects, that's the change in the state of delivery. So basically, it's the change in the state of price delivery. So price were being priced, and it kept rallying, and as soon as we took out the high, right, then we quickly shifted, we changed from a bullish trend to a bearish trend. That validates, and as soon as we have this market structure shift, it validates our our shift, our change in the state of delivery. So what do we anticipate? We expect price to rally higher back to this opening price, the opening price of the candle that actually raided the stop, right? Usually you place a limit order around the opening price of this bullish candle, and then expect price to tap us in from there. Stop loss should be at the top of the top of the bullish candle that actually raided the stop, that did the stop hunt. So stop loss should be here, and then we target 1 to 2. So, but this is just how I apply it. I'm not saying that should be how you apply, or you should even try that at all. But what I would recommend is this pattern repeats, right? They repeat, and once you've been able to study the chart, study your price action very well, and observe one or two of this, right, daily. Once it repeats, you observe, you study them. So, and then you can come up with your own trade pattern. So basically, I set my entry at the 50% level. That's the consequent encroachment of this candle. Only the body, using only the body. So you take your Fibonacci tool, you measure from this point here, which is the close of the candle, the bullish candle, the 15-minute bullish candle, to the open of the 15-minute bullish candle, the 50% level, which is somewhere around here. I place my sell limit, and then I got out just a little below this low. And initially my take profit level should be 24367.05, but because um price closed on Monday here, which is at 24506.85, right, which is where price closed on Monday, and then price open on Tuesday. So I didn't want to wait that long on Tuesday, because look at, for instance, look at this gap. This gap would have been upward, right? So I had to close around here, close that 2446.39 thereabouts. So it wasn't a bad trade, because it gave me at least 1 to 2.5 risk to reward. I think, if not more than, I think it's basically more than, because my stop loss was around here, and then I got triggered here, took a little bit of heat to this point, and then price quickly dropped down and kept dropping down until I got out manually around this level. So basically, this is my first time actually recording from my phone. I do hope you guys like this video, and if you want me to break down these concepts more, um just let me know how I can do that, and I'll be delighted to help you. So video credit goes to ICT, because all the knowledge that I've gained from ICT for free. You can also check out his YouTube channel on Inner Circle Trader. All right, that will be all for this video. I hope I actually did my best making this video for you guys. So please subscribe if you're new to my channel. I'll be dropping I'm dropping currency trading ideas, indices trading ideas like that, and also gold commodities. All right, thank you very much, everyone.